Thanks for pressing play. This is the Pirate Street Journal. 3 topics from business, tech, enterprise software, and the consumer, all through a category design lens. 10 minutes per topic, 30 minutes total. I'm Bree Clark. With me is Eddie Yoon and Christopher Lockhead. Hey ho, let's go. Topic 1. Gartner, the company that sold the world its tech advice for 40 years, has lost about 70% of its value and more than $30 billion in market cap. Topic 2 today, an aesthetics company ran a lightning strike that may have paid for itself, and it shows you where consumer money is going in an AI world. And topic 3, teenagers stop taking summer jobs, and the financial press is calling it a crisis. We are recording on Friday, June 12th. Hey ho, let's go. Topic 1. Gartner. For 40 years, this was the company you paid to tell what technology to buy. Magic quadrants, research reports, a $30 billion empire built on knowledge work. Now, let's roll the tape. Gartner peaked at $551 a share in November 2024. This week, it's trading around $155. That's about a 70% collapse. Market cap went from about $42 billion to roughly $10. More than $30 billion in value is gone. The market has stopped believing in its future because the moment you can ask an AI which CRM or which security stack to buy and get a real answer in seconds for free, a $100,000 research subscription starts to look like a fax machine next to a bunch of Canon printers. The company that sold the world its knowledge just got repriced by a machine that gives that knowledge away. So, Christopher, is Gartner a one-off, or is every company that sells repackaged knowledge starting at the same chart?
Well, the regurgitation of existing knowledge business is a dying business. That's what we're witnessing here. Now, before I continue, I've posted about this on LinkedIn, and the amount of hate I get when I post about this is fascinating. One of the hate comments is, and the person who wrote this took it down. They were bitching about how they're a Gartner analyst, a senior Gartner analyst, bitching on my LinkedIn about this, that he loves it when people who know nothing about our business are talking about our business. To which I responded, somebody who is such an advocate of research might want to do some research before posting bullshit on LinkedIn, because I know a lot about the analyst business. I'm a 3-time public company CMO, and I've spent millions and millions on market analysts, including Gartner. Okay, with that said, here's what's going on. We started to talk about this 3 or 4 years ago. Every day, AI makes existing knowledge closer to free. That's what's going on. And so the knowledge worker, the classic definition of knowledge worker, is somebody who acquires high value knowledge and gets paid to use that knowledge to affect an outcome, normally within an existing system. That's what a knowledge worker does in general. What we're saying is AI makes that closer to free, and agents makes the execution part closer to free. So what we believe is going on here is the reason Gartner has had a 70% decrease in its value is it represents, it's a scream, not a signal, to all of us knowledge workers that the traditional knowledge worker business has been completely devalued. And this is the part that nobody gets. Technology doesn't take jobs. Technology changes where the value gets created. And so now the value is with people who can create net new knowledge, net new products, services, categories, experiences, etc., and monetize that net new. That's where the value is today. And so the reason this topic matters so much is we believe it's a scream, not a signal, to all knowledge workers to say, hey, listen, pay attention. The value of your value has shifted. And now it's in your ability to create net new things, not repackage existing old things.
So I love that, Christopher. What you are describing is not just a Gartner phenomenon. I think it's the fact that whether it's Gartner or any of the big consulting firms or any other entity that gives advice for a living and monetizes that, is that all advice falls into one of two buckets. It's let me tell you about the past and let me predict the future. And that both have value, but the former is completely at risk of AI and agents, as you were describing. And that the reality is, when Roger Martin, one of the OGs of strategy, says that the true percentage of consulting that is strategy by the strategy firms is about 3%. people need to pay attention and listen, because true strategy, if it's 3% of what the big, McKinsey's and the BCG's and Bains do, that's not a lot. And a lot of true strategy is primarily about, hey, where's the future going to be? How should I place my bets as a result of that? So that begs the question of what is the other 97%? And, it's something that we call monkey see, monkey do, also known as best practices, also known as benchmarking. So much of it, and you tell me, Christopher, how much of Gartner does this, but I can tell you from the large consultancy firm, it's like, hey, looky, who is the best at XYZ? And then let's do what's called a gap analysis and see how far away you are from the best in class company. And then let's figure out ways for you to close that gap. Now, that works in a world where you're trying to compete for share and you're trying to, be better, faster, cheaper than the other guy. But what happens when that knowledge becomes immediately commoditized, exactly as you said, that monkey see, monkey do is perfect for AI. Now, here's a trick, is that true kind of predict the future, true strategy work where we would put category design. The reason why AI won't be able to commoditize that anytime soon is that, yes, there's data involved that can be commoditized. Yes, there's strategy and all that kind of stuff. But a lot of it is courage. A lot of it is wisdom. A lot of it is loyalty to something that I don't know is going to happen, but I trust and believe that if I treat my supers well, good things will happen, but I can't prove it on a
Judgment,
spreadsheet. Judgment, all
judgment,
of these things. And I think back, Christopher, in my career, the gr-
priorities. What
the
problems
greatest
should we
wins,
solve? Where should we go? Where shouldn't we go? What are the trade-offs?
all of that. The greatest wins that I have helped my clients do from a pure strategy perspective and predict the future, you roll the dice 9 out of 10 times or 10 out of 10 times, it's not clear that they always work because of the exactly as you said, there's judgment required. Was it the right time? We talked about like one of my large clients, Anheuser-Busch. We launched Bud Light Lime. 2 years ago, they had launched a commercial called Man Laws, right? And it was like, hey man, you don't put fruit into beer. That's exactly what you don't do, right? And so like timing was a little bit off. Had they not had their nose bloodied in the price war, they would not have listened to us, right? And similarly, so when I was working with them, they launched what was called Bud TV. It was effectively YouTube because they had all this creative content that they were putting out that they had more than the inventory that they had in advertising to do. And guess what? They were just a wee bit too early with that. And that's not stuff that can be commoditized. And so I think to your point, I mean, you tell me, Christopher, how much of Gartner's work is monkey see, monkey do versus true strategy and predicting the future?
Well, I'll answer your question with a statement that I was told years ago. When I was a young man in my late 20s, I went to my first ever, I forget what they used to call it, but Gartner, and they probably still have it today. They used to have this giant conference in Florida, and like a bazillion people went. And I remember being there and seeing Jim Barksdale, who was the CEO of Netscape, talk about back when this is the early days of the internet, right? Anyway, I'll never forget talking to a CIO at that event and talking to him about what he thought the value of Gartner was. And he said, look, nobody smart goes to Gartner for what they think is going to happen in the future. But what we do get value from is they help us put into context what happened last year. So if that's true, that statement's 30 years old. But if that's true, and as somebody who signed a lot of giant POs to Gartner, I think it's a lot true. Now, what happened last year is an informative data point for what we should do in the coming years. And I think that's what this CIO was trying to tell me about. Here's the problem. What happened last year is what? A repackaging of existing knowledge, of known knowledge. Well, that's exactly what AI is legendary at. And there's the rub. And it's interesting. One of the guys who argued with me that Gartner was awesome and I was an asshole pointed out that I had, quote, cherry picked financial metrics. That is to say, the 70% decrease in their value. And he said, look, for the last 4 or 5 years, whatever it is, they've increased revenue 2, 4, 5, 6%, whatever it is, incremental increases. And he said, so clearly I'm full of shit because they're still increasing revenue. And of course, the stupidity of that is obvious on its face, right? What it forgets is there are companies whose market cap, that is to say value as set by investors who buy the stock, is less than their cash position. Because for growth-oriented companies, value is determined by one thing primarily, and that is investors' perception of the going forward category potential. That's why on the eve of SpaceX, we're going to see what will probably be the biggest IPO ever. And it's got nothing to do with what SpaceX has already done. And it's got everything to do with what they think SpaceX can become. And so what's going on with Gartner is their current business fine? Okay, 2%, 5% growth, fine. They're bumping along. What Wall Street is saying is we don't believe there is a future in which Gartner is a material player. And what's true for Gartner, and this is the thing that upsets people on the LinkedIn post, what's true for Gartner is true for knowledge workers.
Amen. Well, and the reality is within the class of knowledge workers, Christopher, and I've seen this at any of the consulting firms that I've dealt with or been at, is that if you're actually good at seeing the future, you don't stay in that business for very long. You get into the arena, you become an entrepreneur, you could become an investor, because just if you're actually have a track record and you can see what the future looks like and build strategy off of it, you're not selling that for pennies on the dollar. You're investing your own money and making massive amount of economics there.
Absolutely.
Quick break, pirates. Everything Pirate Eddie just said about the consumer, he's been saying things like that for 20 years across Harvard Business Review and now Category Pirates. Everything Pirate Christopher just said about category design, he literally wrote the book on it. 3-time public company CMO, co-author of Play Bigger. Now imagine both brains on demand for your business, your career, your next decision. That's the Pirate Eddie bot and the Pirate Christopher bot, trained on every Category Pirates mini book ever written, every super consumer framework, every creator capitalist take, and every category design playbook. You ask, they answer, in their voice with their lens. They come with the founding tier on Substack alongside the full mini book library, the audiobook library, digital copies of all 7 of our big books in every Scooby snack we drop. You can find it at categorypirates.news/subscribe. Now let's get back into the next topic. Excellent timing. All right, moving on to topic 2. While the tech world argues about models, we're watching where actual consumer money is going. An aesthetics company called Orange Twist just ran a lightning strike in Newport Beach called TwistX. And the short version is it paid for itself. A lightning strike that pays for itself flips marketing from a cost center into a profit center, and almost nobody pulls it off. And it points at something bigger. When everything digital gets cheaper by the week, consumer money is consolidating into 3 places: agency, AI, and wellness. The power to shape your own life, the tools that multiply it, and the body you live in. TwistX is the wellness center of that bet. People spending real money on the one thing a model can't hand them, which is what they see in the mirror. So, Eddie, is TwistX the lightning strike other categories should be stealing? And is it a profit? And is this what marketing as a profit center actually looks like?
Well, absolutely. And what's interesting is that we, in the broad context of all the work of consumers that we've been looking at, the state of the consumer, like, oil prices ran up and they're coming down a little bit, but they're going to be high for a bit. Inflation is coming hot. And so consumers are facing a fixed pie of money for more expensive things and they're making choices. Now, here are the things. There's 3 things that I've seen that they are not willing to compromise on. One of them is AI. People are spending money on these subscriptions for themselves because they have seen the value of what they provide, whether as a therapist, whether as a financial advisor, whether as a career coach. There's real money to be made, real value that's being extracted for $20 a month or $100 a month or whatever it might be. And it's going to be far more like streaming. If you remember in 2011, I got a lot of hate mail for writing about in HBR that Netflix taking their price up from $6.99 a month to $9.99 a month was a good thing. And people are like, what are you talking about? And I'm like, no, you got to realize they have so much more pricing power and the future is going to be I have a Netflix subscription, I have a Hulu subscription, I have a Disney Plus subscription, HBO, and the same thing is going to be true of AI. So that one is got immense pricing power and consumers aren't touching that. Agency is the second one. We've talked about Gen Z is the first cohort of consumers in the US that have prioritized business formation ahead of family formation. And in part, it's because they do not believe that corporations are going to provide lifetime employment for them or any kind of, a career certainty. They have to take matters into their own hands. And so whether it is a small business, whether it is a YouTube channel or a Substack, these next consumers are waiting to get married. They're waiting to have kids until they feel some certainty that I can make money and produce results that does not require an employer to bless me with a job. Now, the third thing that consumers are spending money on is this whole idea of aesthetics. And this is a little bit new news for me, relatively speaking. I was late to the aesthetics category from an advisory consulting standpoint.
Hey,
My
Eddie, I hate
buddy,
to interrupt you, but to see how great my face looks today?
it's always
Doesn't it look
glowing and always
incredible?
amazing.
Doesn't it look incredible? You know why I look so great today, Bree? Because my wife made me get a facial 2 days ago.
Well,
That was going to be my guess.
And I got to tell you a funny thing about this. So I go there, and of course I'm a victim here. I'm being tortured against my will. This is not a thing that I do, right? I think this was my third or fourth facial in my life. Anyway, I walk in, and the gal's a nice gal and all that stuff, and she sits me down. And the first thing she says to me, Eddie, you ready for this? She says, "What's your skin routine?" I said, "What do you mean?" She said, "Well, what do you do for your skin?" I said, "Well, I get in the shower, I wash my face with some soap, and I wash my other neighborhoods, and I get out the shower."
what
Apparently,
kind of
that's not
facial
a
did you get,
routine,
by the
Bree.
way? What
Oh,
facial did you get? Do you know?
actually, I did have something. I had a knockoff. I said, "Is this a Hydra facial?" She said, "Well, it is. It's just an off-brand Hydra
Off-brand.
facial."
Okay, interesting.
That's what she said. So I don't know what
Well,
I got.
so you
It was
take that
painful
data
at points.
point.
Apparently, I have a lot of blackheads, but see, I don't have any of
Yeah,
them now.
you look fantastic. Well,
Thank you.
and importantly, like this was me, a half a decade ago when I first started working with, the OG Clint Carnell, who is the CEO of Orange Twist, and Denise Keeler, who's the chief growth officer there. And the reality is aesthetics is just going to be booming because, cavemen like you and me are going to be coming to the category. Olive Young, which is one of the Korean skincare retailer that's dominant in Korea, is making forays into the US. And in Asia, per capita spend on skincare among dudes is just as high as it is among women. And so you can just see where the category is going in the same way that middle-aged women drove the video game category through casual gaming. Men are going to come to the aesthetics category. It's going to be even younger. And I think, Brie, you've even seen this amongst your cohort of that. There's a lot more aesthetic spending that's happening earlier, across both genders and across socioeconomic groups. So aesthetics is going to be hot to trot for some time now. And now, why is this important? Is that what Orange Twist did is notable because they are the poster child for a lightning strike. In the lightning strike, for those of you who may not have read our book or many books about it, it is the singular most powerful marketing strategy. It is when you have the courage of your convictions to not kind of peanut butter spread your marketing spend across the year and have a moment of belief that if I concentrate my money into one area, into one day, I can make so much word of mouth that it pays for itself and so on and so forth. And so it's exactly what Orange Twist did. We were at the Hyatt Newport, an event that cost, mid six figures. And guess what? It was profitable. How did they get there? Well, there were 30 brands and suppliers that sell into Orange Twist.
I hate to interrupt you. Are you suggesting for a second, Eduardo, that marketing could be a profit center?
Well, I am suggesting that marketing, if you are losing money as a cost center, that's going to be your surefire way to get fired. And it explains why CMOs have had a poor shrinking tenure in their jobs. But the reality is that marketing should at least be break even, if not a profit center. And we write about how exactly to do that. But Orange Twist lays out the playbook was that, a mid six figure event, call it a third was covered by vendors, people who are trying to sell into Orange Twist to get them to buy their huge devices. And they had booze there and et cetera, et cetera. A third of it was paid by consumers to get in the door, so they had to pony up $250 to show up and check out all these different vendors and, get some treatments here and see what was available. And then while they were there, they signed up for treatments on the spot, booking them in advance. And so the whole thing became extremely profitable. Yeah, and Christopher, you've talked about this quite significantly, is that the employees at Orange Twist were so jazzed to see, like, I can't believe this actually happened, that people showed up, that the vendors were willing to pay for this, and that they were so excited. And so, you had this thing in a world where everything is going digital. A really well executed analog event is worth its weight in gold. And so it was actually one of those things that not only did it create massive, economics for the event itself, employees were jazzed, they got trained on the new devices, which the vendors were happy to do. But also, if you think about the word of mouth, this is the brilliant part of it, is that for a six-figure event, they spent maybe four figures on marketing, like paid media, because they didn't have to. There were influencers there. There was social media was going bananas, and that everything was there. And you know what the singular question people were asked? When is 2027 going to be? Because I want to be there. It was one of those vendors where like, sign me up. I want to be there. If you weren't there, you felt like a loser. Consumers were like, sign me up. Can I bring friends? And even when I posted about it, we had category pirates people who were like, can I show up to this event? We're like, sure, come on down. And the beauty of these lightning strikes is that not only did it make money, it suggests that it was the smallest and least awesome it will ever be. It's just going to get bigger and bigger. And I'm so happy for the team, but I'm grateful that they were leading the way, that there's a completely different way of doing marketing going forward.
So I heard an interesting stat last night. Trizepatide and semaglutide, guess what their annual revenue is doing?
Going up?
Well, guess the number.
Is it
I'll
over
give
100%?
It's at $55 billion right now, approximately.
Up from what?
Now, I don't know, but that's not the point.
Okay,
Now
what's the
guess
point?
what the top 4 LLM AI companies combined, what their annual revenue is.
With the top 4?
Yeah. So we're OpenAI, Anthropic. What's their annual revenue combined? They're going 55 to 62 billion. So the two drugs, trizepatide and semaglutide, this is not including Ozempic and or Wegovy, all those things are doing the same revenue right now. So this goes back to consumer spending, same revenue as the top 4 AI companies. Super interesting. I just fact checked everything, heard it
Hmm.
last night. Isn't
So
that weird?
say that again so that those of us who didn't go to school understand it.
Yeah. Two of the GLP drugs sold by Eli Lilly, trizepatide, semaglutide, are doing 55 billion in annual revenue right now, which is an 80% gross margin. The top 4 LLM AI companies, Anthropic, OpenAI, 55 to 62 billion, and their gross margins are 40% to 50%.
Interesting. Fascinating.
Crazy. Fascinating. So
Well,
consumer
in Super of
spending.
One, Super of Nine, right? You get on these GLPs, you lose weight, you start to feel good, you got to buy new clothes. And guess where you go? You go to Orange Twist and you get some aesthetic treatments. Because and it's the reality of
Because
consumer
once your
behavior.
face is not so fat, you want it to be plumped up or whatever.
Yeah. Well, here's the part that it took me for 30 years of consumer work to figure this out, is that whenever I did healthcare work, I tried to figure out how to help consumers eat better, lose weight, all the stuff that like our buddy Carl Dakeler trying to do at Body. And it's almost impossible. Like, there are very few people who can actually do it. And the ones who do it, they fall back, right? The way to actually do it is, ironically, if you look good, you feel good, and then you do good and you live your best life. And I had the equation reversed. I was like, why don't you try to do good so that you could feel good and look good down the road? And it was like,
So it's I
humans,
feel good. I think I look good.
no,
What?
it's
So
I
what is
look
it?
good first. I look good first.
Yeah.
I get an aesthetic treatment. Oh, my blackheads are gone. I didn't know I could look like that. I feel better about myself. I feel good. And therefore I should do good. I'm going to eat a little better. I might actually exercise. And what Bree's bringing up is that the equation used to be, you know, I had to do good first before I felt good or looked good. And that had very low compliance. Aesthetics has a different way of, I look good first, then I feel good, then I do good. GLPs is flipping the equation again so that more people have ways of getting to nirvana, which is GLPs, both make you look good and feel good. And or make I'm sorry, they make it easier to do good so that you look good and feel good.
So does that mean, Eddie, that the combo platter of, let's just call it the growth in aesthetic experiences, let's just call them that if we could, things that make me look better, and the growth of GLP-1s are adjacent but interconnected flywheels?
Super of one, super of nine. And in the same way that AI has delivered all these
So if
benefits,
I lose weight on GPL-1s, I'm going to want a face massage, or what are they called?
yes, facials.
Those things.
Yeah, absolutely. And
A facial.
last
That's what
thing
they're
here,
called, right, Bree?
aesthetics has gone through, in the last 5 years, I would say, a real revolution where it was no longer, if you got an effective treatment, it was painful and expensive. They're breaking the compromises so that you can get effective treatments that aren't lotions and potions that you buy at Macy's and you're like, I don't know if this works or not. Things that work, that don't cost a lot, that don't hurt a lot. Obviously a game changer.
Fascinating stuff. Topic 3. The Wall Street Journal ran a piece this week with a crisis headline: Teenagers stopped working in the summer. Summer hiring projections are the weakest since the government started counting in 1948. Then you look at the data. Teen labor force participation peaked at about 58% in 1979. The share of teenagers holding a job has fallen from 49% then to 31% now. But the kids who want work are finding it more easily than their parents did. Teen unemployment is 14% today, down from 16 in 1979. The decline is almost entirely teenagers choosing to opt out. New York City's summer jobs program drew 200,000 applicants for 100,000 slots and had to run a lottery. So here's the part the crisis headline misses. The better opportunity the wealthy kid used to buy with an unpaid internship now costs $20 a month for any teenager with a laptop. The gate the journal is mourning just blew open, and not only for the kids who could already afford to skip the paycheck. Rewrote 18 AI businesses a teen can build before they turn 18, just before this headline was released. So, Eddie, are teenagers making the smartest economic bet of their lives, or are the kids who needed that paycheck most getting left behind?
Yeah, it's probably, I would say, two-thirds the former, one-third the latter, right? Is that I think what you're seeing is that, again, the way to make sense of consumers is you have to assume that they're rational and not being stupid. That doesn't mean that they're never stupid, but in general, what you're seeing among teens is that the value of leisure time has gone up. You have more power in your phone than you had in the space shuttle. You have more access to, infinite videos and entertainment on YouTube and Netflix and this and that. It is incredibly valuable to just chill out and Netflix, right? Netflix and chill. And so the value of working for, 15 bucks an hour, 16 bucks an hour,
I thought it
it's
was
a different
Discord
trade-off,
and
right?
chill now.
Probably that is the youngins, as it were, right? And then you have, so that's kind of one. Two is that absolutely the enterprising teenagers are going at creating opportunities. I've seen more young people become entrepreneurs, want to learn how to invest and, vibe code stuff. Like, at that Orange Twist event, Audrey was working as an intern there and she vibe coded a little, kind of like, are you a caveman? Are you enlightened from a skincare perspective, quiz that you did. And, did it with Claude Code, just like that, has not taken a programming course with it. And so you have these opportunities that unparalleled that we wrote about here. And that also, I think there's a real kind of disparity. Like what was really interesting for me was watching one of my college kids, hey, get a job, earn some spending money. If you work at Panera in Illinois, you'll make 18 bucks an hour. If you work at Panera in Indiana, you make 12 bucks an hour. It's a pretty massive difference of or arbitrage there. And so like I do think that the teen market is dramatically changing and the delta between the winners and the losers will continue to grow. And that's not a great thing. What it does mean is that the more that we can kind of get into the education system, that anybody can participate in the AI economy, like the 18 jobs that we wrote, 18 ways that we wrote for how to build a crazy profitable business as a teenager, the AI sequel, you don't need calculus to do this. You don't need like to be in honors classes to do this. You need a little more of the intangibles that we talked about: courage, judgment, risk taking,
Motivation.
empathy, motivation, energy. These are all the things that will allow you to earn money in a way that I think people are really kind of shocked about. So I think the journal is observing the data. They're seeing the what, but they don't quite see the so what and now what. And so I think what you're going to end up with is that this idea of a teenager having 30 grand before they're 18 and never having to worry about retirement, that's going to just continue to grow. And that what you're also going to see is that there are going to be some teens that make so much money, they're going to be like, wait, you want me to stop what I'm doing now and go to college and pay money instead of making money? Like,
Crazy.
what's up with that? Right. And then the third thing is that you will see kind of, laggards, kids that are kind of like, they weren't taught this, they weren't exposed to this, they didn't have opportunities to do that. And that's where I do hope that, whether it's Elon at SpaceX, you know, he can make Starlink free just as he had for certain places when there's a natural disaster or this and that. Like there are things that can be done where you make access far cheaper, far easier for people to get at who are underprivileged or don't have quite the upside. But again, we'll kind of see how that all shakes out. But I think my hope is that the winners win in a way that is visible, public, and that Gen Alpha is want to do is just put everything online so that it is motivating and not envying creating for people to really reach out.
And there's a very false narrative happening right now. People are talking about the job apocalypse. Well, almost every month, the job numbers come out and they're ahead of expectations. It just happened in the last print, which I think was May. And so more jobs are being created now than were ever forecasted for this time period. That's point A. Point B is most people don't realize this. We are experiencing a massive new business startup boom in the United States of America. According to the Commerce Institute, from 2019 to 2024, there was a 47.8, let's call that 50% increase in new company starts. A 50% increase. And we're at about 4% unemployment roughly, which is basically zero unemployment. And yet we have a situation where, I don't know if this is the case in your lives, but in my life, there's essentially two kinds of younger person. And when I say younger person, I mean 18 to 30. There's one group that says, oh, this is the worst time in ever. There's no jobs. Nobody's hiring. AI is killing everybody. Nobody likes me. Everybody hates me. I'm going to eat some worms. That's one perspective. Then there's another perspective, which I think is a lot closer to the truth, which is this is the greatest time in history to be a young person. And here's an additional proof point. This just happened, and to the best of my knowledge, is massively underreported. About a week ago, Zuckerberg Meta announced what they call America's Workforce Academy. They are spending $115 million to pay young people to come and learn trade skills. They're going to pay them to learn the skills and guarantee them a job upon graduation because there's such a lack of high-skilled, trades-oriented work. So we now have a company who will pay you to become an electrician and give you a job after they pay you to do it.
It's the smartest thing that Zuck could do, and frankly, all the hyperscalers should be doing that because there was just this whole kind of skilled blue collar shortage. It's massive, right? People in construction, people who are electricians, people who, the physical, tangible jobs that AI won't touch. Maybe robotics will get there at some point. That all
I
needs to
have a buddy
happen.
who's a house framer, and he could be working 24/7, 365 if he wanted to be.
Yes, and probably is making more money than he's ever made beforehand because of
He is, and he's
demand.
about my age, and he's like, how can I stop working when they're just throwing all this money at me?
That's the beauty is that and I wish for a different framing than blue collar, white collar, knowledge worker versus physical labor. Is that it is just the fact
It's
that some
value
people,
creator versus not value
yes,
taker. That's what it
yes.
is.
Well, and some people like to work with their hands, and some people don't, and that's okay. And they're just different. In that, I think what will be kind of fascinating is that the whole remember the Millionaire Next Door, and the big aha was that it's not professionals who are the millionaires; it's the small business owners, it's the tradesmen who didn't, the
One of
pay for
my
the party
favorite
costs
books
were
of all
low.
time, Eddie, growing up in Canada.
Amazing.
This was an incredibly popular book. I think you can get it in the United States. I read it when I was in my early 20s, and it changed everything for me because I had almost gone bankrupt. The book's called The Wealthy Barber. And it's exactly this story. It's about how a barber lives below his means, puts the money away, lets it grow. I don't know if it's in the S&P 500, but the equivalent thereof, and forgets about it, does that for 30 years and wakes up on one day, ta-da.
Yeah. Well, and so then there might need to be an update. The Billionaire Next Door. Well, one, inflation. Two,
Yep.
some of these folks will just make bank, as electricians building out data centers, and some of them will create intellectual capital. There's no reason why a physical laborer, a house framer, an electrician, a plumber could not be a creator capitalist themselves, making money, trading time for money, but then also creating reputation capital, relationship capital, intellectual capital about how to do it, and then invest it well, because frankly, if you're like, that's the part of like, people talk about insider trading and, it's illegal if you're an average Joe, not if you're a senator or congressman. But if you are a physical tradesman building data centers for the hyperscalers in an area that you weren't expecting, you know something that others don't. And the way to leverage that information, whether it's to say, you know what, that data center is going to bring jobs. Those people are going to need homes. Maybe real estate is a good play for you. So like, I think the opportunity for the billionaire next door is just sitting there.
Well, and when you look at the math, it's extraordinary. And this is the part that drives me crazy that none of us got taught in school, and I don't think they teach in school today. So we use 30,000. Could a student make $30,000 over a summer? And we proved in the most recent mini book about that they absolutely can. Now, let's do some back of the envelope math. If you're a young person and you were able to save $100,000 and you put that $100,000 to work in the S&P 500 and you assume an annual rate of 10%, which is actually a little bit low for the historical rate, that $100,000 over 30 years is $1.7 million. And so this is the thing that people get. In the beginning of their careers, we all start by trading our time for money. Most people are never able to even put together a medium size, let's call it, amount of money and put it to work for them in the market. They don't realize that people who are wealthy not because they work for things, but because they own things that work for them. And so if you're 18 years old and you get to 30,000, and then if by the time you're, let's say, 25 years old, you get to 100,000, well, 30 years later, you're going to be worth almost $2 million.
We'll see you next week, Pirates.